Hello, listeners. This is Pat Walker bringing you the latest market update. Buckle up because we've got a lot to cover today. The first week of September closed on a somber note for the stock market. We saw significant declines across the board, with the major indices settling near their session lows. The Dow Jones Industrial Average took a 1% hit, while the S&P 500 fell 1.7%. The tech-heavy Nasdaq Composite felt the brunt of it, tumbling 2.6%. Now, what's behind this downturn? Well, it all comes down to the August employment situation report released this morning. Hiring activity was lighter than expected, and we saw downward revisions for July and June, leaving employment 86,000 lower for those months than previously reported. It wasn't all doom and gloom, though. The unemployment rate saw a slight decline, and average hourly earnings increased by a stronger than expected 0.4% month over month, which should provide some support for consumer spending. But here's the kicker: while the report was weak enough to fuel more selling in this already downbeat week for equities, it wasn't weak enough to convince the market that the Federal Reserve will cut rates by 50 basis points at the upcoming FOMC meeting. The probability of such a cut has now dropped to 29%, down from 41% before the data release, according to the CME FedWatch tool. Hey folks, before we dive deeper into the market analysis, I just want to remind you to hit that subscribe button if you haven't already. And if you're enjoying the content, give us a like and drop a comment if you have any questions. Your support helps us keep bringing you these market insights. Now, back to the report. Adding to the negative sentiment was weakness in the semiconductor space. The PHLX Semiconductor Index dropped a whopping 4.5%, largely due to Broadcom's disappointing guidance. Other megacap stocks also traded lower, dragging down the Vanguard Megacap Growth ETF by 2.1%. In the bond market, we saw some interesting movements. The 10-year note yield settled 2 basis points lower today and 20 basis points lower for the week, closing at 3.71%. Meanwhile, the 2-year note yield ended 10 basis points lower today and 28 basis points lower for the week, settling at 3.65%. Let's take a quick look at how the major indices are faring year to date. The S&P 500 is up 13.4%. The Nasdaq Composite has gained 11.2%. The Dow Jones Industrial Average is up 7.1%. The S&P Midcap 400 has climbed 5.7%. And the Russell 2000 is up 3.2%. Looking ahead to next week, keep your eyes peeled for some key economic data releases. We've got the August Consumer Price Index coming out on Wednesday, the August Producer Price Index on Thursday, and the preliminary September University of Michigan Consumer Sentiment Survey rounding out the week on Friday. In company news, we saw a significant plunge in Braze's stock price despite the company topping Q2 EPS and revenue expectations. The customer engagement platform provider is facing growth concerns and questions about its spending plans, leading to a sell-off. That's all for today's market update. Remember, in the world of finance, knowledge is power. Stay informed, stay ahead. This is Pat Walker, signing off. Until next time, happy investing.